The market is currently closed, and the last reported price for Rezolve AI PLC, RZLV, was $2.79 per share, closing out the session on Friday, December 5, 2025, at 4 p.m. EST, reflecting a sharp decline from its intraday high of $2.93. Now, the surface-level narrative often focuses on the daily volatility of this stock, seeing it as just another high-growth, high-burn AI microcap that swings wildly on sentiment. But that observation misses the most important detail of the past week: the company's recent acquisitions and the market's extremely mixed reaction to them. The expectation, generally speaking, has been that Rezolve is a pure-play conversational AI firm focused on retail, but the reality is they have quietly and aggressively moved to position themselves not just in AI, but at the intersection of enterprise digital experience and stablecoin payments, fundamentally changing the risk-reward profile. And the market simply has not settled on whether this multi-front expansion is brilliant or overextended. The recent acquisition of CrownPeak, an enterprise digital experience platform, is the core of this tension. On paper, it immediately adds around $70 million in expected revenue and is reported to be immediately EBITDA accretive, injecting a dose of financial stability and a large established enterprise client base into a business that has been bleeding cash. That is the kind of immediate positive catalyst investors crave. However, the associated debt and the sheer speed of this pivot, which follows other recent acquisitions like Subsquid Labs, suggest a leadership team operating under immense pressure to validate a high valuation, choosing aggressive growth over focused execution. This is where the curiosity loop begins, because the market is asking, is this a calculated, synergistic power play, or a cash-hungry company trying to buy its way into relevance before its own liquidity position becomes unsustainable? The daily trading in RZLV throughout the end of the week reflects this precise indecision. After the announcement of the CrownPeak acquisition, the stock saw significant downward pressure, dropping notably on the news. This is a classic sell-the-news reaction, but the size of the drop suggests that a substantial part of the investor base is uncomfortable with the capital structure of the deal, which involved assuming approximately $150 million in debt. The volume figures are telling, sitting well above the average, which indicates a serious battle between institutions who see the long-term strategic value of combining CrownPeak's entrenched customer relationships with Rezolve's AI capabilities, and those who are taking profits, reducing exposure, or simply running scared from the balance sheet complexity. Short-term traders are capitalizing on the volatility, creating a choppy trading environment that is less about the core business and more about the technical momentum and news cycle. We also have to consider the broader macroeconomic pressure. Growth stocks, particularly those not yet profitable, are extremely sensitive to interest rate expectations, and the market's ongoing uncertainty about the Fed's next moves continues to act as a headwind, putting a higher discount rate on Rezolve's forecasted 2026 profitability. Now, let's talk about the elephant in the room that is fueling this market tension: the short-selling community. Rezolve AI has been, and remains, a prominent target. The latest reported short interest figures show over 12 million shares held short, which represents more than 10% of the public float. This is a substantial position that places significant downward pressure on the stock. What's even more compelling for active traders is the days to cover figure, which is hovering around 1.01. This low number might suggest that the short position is easily covered, but combined with the high volume, it signals an extremely active and contested trade. The short thesis, which was famously detailed in a report by Fuzzy Panda Research earlier in the year, which the company rejected, centers on skepticism regarding the company's patented technology claims, its actual revenue generation, and the overall liquidity position. The market expects high-growth AI companies to focus on core product strength, but short sellers are betting that Rezolve is prioritizing PR and acquisitions over fundamental profitable sales growth. For the retail investor, this short pressure translates into significant risk and potential reward. The short borrow fee rates, while having eased slightly from their peak, are still noteworthy, recently topping out near 3.81%. High borrow costs signal a continued demand for shares to short, indicating that major bearish firms are still actively engaged. The actionable insight here is that investors need to monitor the short interest percentage of the float and the daily short volume ratios, which have been consistently high, often above 40% of the FINRA volume. If institutional buying pressure from the new acquisitions manages to absorb the daily selling, that low days to cover could quickly flip into a short squeeze trigger. Conversely, a failure to execute on the CrownPeak integration would validate the short thesis, leading to further downside. Do you think Fuzzy Panda was right this time, or are the shorts pushing fear to capitalize on the CrownPeak deal's complexity? Comment below with your take on the rising short interest, smart money, or manipulation. The core business, for those who need a refresh, is the Rezolve AI Brain Suite, which is an AI-powered commerce platform aimed at enhancing customer engagement and operational efficiency for retailers and e-commerce companies. It's built on a proprietary large language model, which the company calls Brainpower, designed for transactional commerce. Their goal is to facilitate agentic commerce, where AI autonomously handles the entire customer journey, from conversational product discovery to instant frictionless checkout. This is a massive forward-looking market, and Rezolve's vision of integrating stablecoin payments, they recently highlighted processing over $1 billion in stablecoin transactions last year through their payments infrastructure in Brazil, is a truly unique differentiator. They are not just an AI company, they are aiming to be a full-stack, AI-powered commerce and payment settlement layer. This model, if successful, could capture significant value, but it requires them to execute across multiple, complex technological domains: AI, enterprise SaaS integration, and decentralized finance. The financial reality, however, remains sobering. The company's cash flow statement shows consistent, deep negative operating cash flow, and its reported net income figures are heavily in the red. Valuation metrics like the price-to-sales ratio are extremely high, which is common for high-growth technology companies, but is difficult to justify without a clear path to profitability and sufficient liquidity. The slew of recent press releases touting high-profile executive hires from major tech companies like Microsoft and Google, and massive future revenue targets, like the stated aim for a $500 million annual recurring revenue exit rate for 2026, serves to build the expectation that this ship is accelerating rapidly. The reality, which the market is now grappling with, is that this acceleration is being fueled by aggressive capital deployment, which the institutional ownership numbers reflect. While the number of institutions holding RZLV has increased, the average portfolio allocation to the stock by these institutions has dropped significantly, suggesting that they are taking smaller, more cautious positions rather than making high-conviction bets. This split in institutional behavior, more funds holding but with less overall capital allocated, is a key indicator of market uncertainty. Looking ahead, the next few months will be dominated by execution risk. The expectation is that the CrownPeak acquisition will be immediately accretive, expanding the customer base and streamlining the go-to-market strategy. The reality is that M&A integration is notoriously difficult, especially when combining a high-burn AI tech platform with a mature enterprise digital experience platform. Key catalysts to watch for include the successful onboarding of CrownPeak's client base to Rezolve's AI features, the continued progress in stablecoin payment adoption in Western markets, and any updates on the ongoing legal and investor inquiries that have been reported in the news, which always serve as an overhang. The primary risk remains liquidity and dilution. Any failure to hit sales targets will amplify the financial strain, potentially forcing the company to engage in further capital raises, which would dilute existing shareholders and intensify the short seller pressure. Retail investors need to keep a close eye on the balance sheet's quick ratio and current ratio, which have been quite low, indicating immediate short-term obligations exceed liquid assets. The long-term opportunity for Rezolve AI plc lies in its unique marriage of AI and transactional commerce, a space that is clearly receiving validation from major industry players, like Amazon's CEO, who